Good morning, guys. Welcome to today's session of Market Snapshot. My name is Samson Mzera, and today we're going to be very short and precise. If you can hear me, just say hi on the chat section while we start. The moment I'm looking at the currency strength meter, this is the strength for the past 1 day. You can see over here that New Zealand dollar is the strongest, then Australian dollar. We'll talk about why, especially Australian dollar, and then Canadian dollar, and you can see the US dollar is all the way over here. So we've been witnessing some weakness in the US dollar due to a number of reasons. I think we spoke about this a few weeks back. We said they had some dovish hints in their speech. There was a speech on Wednesday where the Fed chair was speaking, and he had some very dovish remarks. Maybe that's what's happening, maybe not, but we look at the calendar also to confirm. Philip Patrick, hi. If you can hear me, just say hi in the chat section. So, Yusuf, Arunda, hello. I'm hoping also when you're doing the analysis, you also have your charts with you and you are also following on your charts. So if you look at this progression over time, you can see that the dollar was somewhat strong. It was the third strongest currency, but it's slowly losing its position and it's going lower. So that purple line over there is the dollar. I hope this is very clear. The purple line over there is the dollar. You can look at something like Australian dollar, which went from being one of the weakest to being one of the strongest currencies on the chart. And as you can see, we need to find more reasons why this will continue being the same. Which other interesting one is here? Oh yeah, Swiss franc. So for Swiss franc, we know it's been supported because of whatever is happening in the Middle East, and that's why it's been strong for the longest time. It was something that we were watching quite keenly with the progression of the war. So this is one currency that if tensions continue going the way they're going, then chances are it's likely going to remain elevated. It might not be the strongest currency, but it might remain strong, even if it's in the top three strong currencies. So usually what you do is you find a good currency that's very strong, and then you see if you can pair it with a weak currency. If you can explain the reasons why this other currency is strong and why this other is weak, then that's a good a pair to do trend following trading. So this case, for example, AUD, we'll be looking at AUD and USD. But before we continue, let's look at what happened for the week. So this is back at Forex Factory, and I'm just going to highlight a few things. I'm not going to talk about everything. So the first one, of course, we had that BOJ report, which made the Japanese yen to weaken. But let's start with the dollar, because that's where we had quite a lot of interesting. Yeah, it was on Wednesday. Okay, so on Wednesday we had ADP, we had JOLTS, and we had ISM. Now, remember that before that, we had the Fed speaking. Yeah, it was actually that evening. We had the Fed speaking. They were very hawkish. They were saying that we're going to continue keeping rates for longer, but it seemed like the effect they were going for, which was a stronger dollar, wasn't quite the case. The market perceived it the opposite, and we started thinking, a lot of traders are anticipating that the dollar is going to weaken for longer. Before we go into that, you can see that JOLTS job openings here came in at 9.55 million. The expectation was 9.34. So that was a slight bump. ADP came in at 113K, slightly lower than 149. And then ISM came in at 46.7, which is very low. So on this day, instead of the market looking at the ADP or the JOLTS, the focus was on ISM. Why? This is the lowest reading we've had in months. So if I pull out the chart like that, you can see that November here, we had the lowest reading since July. I think since August, sorry, since August. Now, this clearly means that the US economy is contracting. So if you view it like this, level of diffusion index surveyed based on managers. Okay, so it came in at a very low figure, and probably the market at this moment is focusing more on the negative news than on the positive news. That's why we ignored the jolts, we ignored ADP wasn't really that bad, but ISM came in and things started dropping. Yeah, so from this day, as you can see on the chart, from around Wednesday, we started seeing just a minute. I think so. Can you hear me? If you can hear me, just say hi again on the chats. I think we have network issues. Fidel, hi. Jeru, hi. Agnes, I can see Boys TV, Francis Kiberenge. Hello. So yeah, so I was saying from Wednesday, let me just put chat that's Wednesday was one. Wednesday was first of November. Yeah, so from around 1st of November, which is here, that's 1st of November. So from around 1st of November, Euro started trending higher. If you look at GBP, USD, same story, we started going higher. So this was 1st of November over here. You can see that the trend is pretty much the same. We're going higher. Why? Because we're expecting the dollar to be weaker. So if you look also at AUD, USD, 1st November will be here. And see we're having quite a clean trend upwards. Yeah, the theme is the same. Dollar expectation supposed to be the expectation in the dollar is supposed to be weak because of that perceived times in the US are going to be over. That means we'll stop seeing a lot of what is making the US economy so strong. So now that brings us to today. We've talked about two things. Number one, we expect that the market will interpret more strongly negative news than it's going to interpret positive news. That means if something like USD non-farm today comes in lower than expected, the market is going to be a strong signal for a weak dollar than it is when, say, the number comes above even the previous. If it comes above 178 or even higher, that's not going to send a strong signal in the market. Why? Because the market is already assuming that the economy is starting to crack. We might start seeing weakness in the dollar. The Fed might not raise interest rates. Sorry, the Fed might not hike anymore, and they might even start cutting. So that's the play. If we see red news, then it's going to build up to the already weak dollar momentum. So I'm going to give an example of what happened in July when we had a similar occurrence. So let me just take you back to July. This is what we're looking at here. So why July? Because you had the lowest reading for the year then. So if you go back to this chart over here, this calendar over here, on Wednesday, this ISM reading, if I expand on this and I go to the history, I can see that for the year, sorry about that, let me zoom this in. Like that. So in July, we had our lowest reading, and this was July 1st. We had, actually, it's July 3rd, sorry. We had 46, the reading coming in at 46. Yeah, so I'm going to mark that in the chart. July 3rd is over here. This is July 3rd. And yeah, this is July 3rd, where the first red line is. And then what happened? Go to the history. Yeah, so my connection just disappeared. So I think we're reconnected. If you can hear me, just say hi. Chats. I don't know, my Zoom just went off. I think it's the internet connection. Okay, so let me just recap what we were talking about. The week we had the lowest ISM reading, and the week we had fairly not so good non-farm reading. It led to an uptrend the following week. So this was July. This is when you had the worst July. Let me just adjust this. July 3rd. The 4th. So it's July 3rd. Let me adjust this slide. July 3rd. Gaddafi is saying my sound is not fine. Is it now or so? Am I? Can you hear me now? I think the connection is. Let me just change the network a bit and then we continue. Right. Am I audible now? If you can hear me, just say hi or just confirm on the chat section. I'm seeing it's very shaky, still shaky. What if I stop sharing my video? Okay. Okay, I think we can continue. Okay, so again, last week, not last week, the day we had the lowest ISM reading is the same day that the following week we had a very massive uptrend in the markets. I'm not saying that's exactly what's going to happen, but signs are there that we might see the dollar continuing to weaken further based off of that. If we have a low reading, a weak NFP reading today, then chances are we might start seeing this trend changing and going the opposite direction. Remember, we've been in a sideways sort of trend, both for GU, and if you look at Euro, same story. If I zoom out a bit, see that we have attempted previously to go higher, but we were not quite successful. But that might change going into the next week. Yeah. Now, we said we look at Australian dollar because that is in interest, and particularly because we have Australian dollar news next week. So if you look at November 7th, that's next week on Tuesday. Here it's saying, first off, we have the RBA statement and the cash rate. Now, if I open the expectations for the market, so the Reserve Bank of Australia will likely hike rates next week, while the third quarter's GDP reports could show economies slowing across the region. The Reserve Bank of Australia will likely hike rates next week. Now, when a central bank hikes rates, that means we expect the currency to be stronger. And that explains why, when you look at Australian dollar, it's the strongest. It's been trending. It's the curve at the moment, it's at the top. Yeah. Because the market is already expecting a hike. So everyone is rushing to buy Australian dollars at the moment. Now, will that continue going forward? We might see some weakness because it was already trended strongly, but we need a catalyst for it to continue. And that catalyst is now NFP. So this is where now the NFP positioning comes in. Today is Friday. Yeah. So this is where NFP report comes in. So if we see a very weak reading, it might be a catalyst for that Australian dollar, US dollar trend to continue. So if you look at the chart for Australia dollar, US dollar, you can see that it has had a very strong upwards trend. Now, the catalyst for this trend to continue probably be that NFP reading that is going to come up later today. So this is what we will be closely monitoring just to look at the reaction on it. So if you go to the chart at the moment, I'll start from the H4. The person who was asking. Yeah. I think the Zoom keeps on disconnecting. Okay, I think you're back. Okay, so I was saying this is one chart you should be very interested in for today, because chances are we might see the trend continuing higher. So a lot of traders are going to look at this and they're going to see resistance zones and the fact that this market is ranging and think that they need to start short selling from here, which might be a play, but remember when the fundamentals, uh, it's important to watch out for the fundamentals, even though you're trading technical analysis. So in that case, should be very careful with attempting to sell a UD/USD today, especially before the news. Yeah. During the news, if we or if non-farm is my connection is very slow. Way back here. Okay, think you're back. Okay, apologies for that, guys. I'm trying to see if we can make the connection a bit more stable. Will be okay right now. Yeah, the connection is okay right now. I think we should have a bit more stable internet. Okay. Okay. So again, Australian dollar will be a very interesting pair to play out today. Remember, it has imbalances up here. If you look at the daily chart, we were in a downtrend, and now it seems like we might have a good reason to change. Although, again, still need to be careful, especially with the reading that's coming out. Yeah. So again, the catalyst here is if we see the weak non-farm coupled by next week's very anticipated hike from the Reserve Bank of Australia, that could mean a new trend, a change of trend, or at least some upward momentum for the better part of next week till Tuesday, till before Tuesday. So that's one way to look at it. If we see that non-farm is weak, then might have a very mixed reaction because remember the dollar was already weakening. So if we see, sorry, if we see non-farm is strong, if the numbers come in higher than expected, then that might cause mixed reaction in the market because remember the market is already anticipating the dollar to weaken. So if news comes in that the dollar is strong, it might mix things up. So it's not going to be quite an obvious play for a higher non-farm reading, but for a lower than expected non-farm reading, things will be a bit more clear because we're already expecting that weakness in the dollar. So that's one thing to look at. That goes for, so AUD is probably one of the best candidates because Euro and GU, yes, they're okay, but the economies are not looking that well, and there is no positive news catalyst that you can rely on fundamentally to say that it might change the trend. So that's one thing to keep in mind. Okay, what else do you have on this section? You can see that here, the market, so this is a Fed Watch tool that we've been monitoring for a couple of sessions. Yeah, so Fed Watch tool just shows you, this is 40 days, the next meeting. The Fed Watch tool just shows you what the market is expecting the Fed to do over the next couple of meetings. Yeah. In this case, you can see that there are probabilities on the top right here. Probabilities of a hike, which means they'll increase interest rate. Probability of it remaining the same, that is no change. And the probability of easing, that means they will cut the rate. So in this case, we can see that for the next meeting, there is still a big expectation or a huge expectation that we will remain at the current levels. I don't know if this is clear on my end. Yeah, so if I zoom this in completely, you can see that there's an 80% chance that we will see interest rates being held. Yeah, but that's not the interesting part. The interesting part is the market from yesterday is expecting the Fed to start easing. So here it's written ease. Easing means cutting interest rates. The market is expecting the Fed to start easing from as early as March. It's a very low expectation, but that tells you something about where people seeing the dollar going forward. So in that case, this is something to monitor carefully, how this will behave. Will we see this 12.7 go lower or higher as time progresses, especially after today's announcement? This is going to help you in gauging how weak the dollar is going to be. So this is one month to look at in terms of what is the likelihood that they're going to ease. So we said today is going to be very brief, not going to go through a lot of things. Our focus right now is on NFP, and we already know, we've discussed it. We know that the market at the moment is interpreting negative news more strongly than it is receiving positive news. And that has to tell you something about how to position yourself the charts. So I can just go taking a few questions and then we call it a session. So can you explain correlation, DXY? So DXY and the correlation between DXY, it's usually an on and off correlation. When you expect the dollar to be strong, so okay, so the correlation between the dollar and the US oil, it depends on the current events in the market. So if we have news that is overshadowing the dollar, then it will lead to a weaker UK oil price reading. But if we have news, so the normal correlation is negative correlation. That means as the dollar strengthens, UK oil or US oil weakens. However, when we start seeing geopolitics coming into play, then that correlation breaks and oil starts behaving on its own way. So usually you have to monitor when the correlation is working and when the correlation is not working. Any other question while we look at the indices? So while you're waiting for other questions, this is another way to look at what the market is expecting. You can see for the better part of this week, we've had the indices rally. This is UT 100, NASDAQ 100 also. We've been going up this way. This is another good play for NFP. If the reading comes in lower, we should expect this trend to continue. If the reading comes in lower, we should expect this trend to continue. This is UT 100 and US UT 100 and US 500. I'm not so sure about US 30, but it seems to be behaving similarly also. Scroll up. So I think that's it for the session. Very few plays, but just be very careful with them. I'm sure you can get a few opportunities. UT 100, for example, just look at these pullbacks. If we can find healthy pullbacks on this chart at this point here and at this point here, then again, the catalyst is NFP. If NFP comes in negative, then we'll see these ones. These are optimal areas where buyers will be looking to enter based on the previous hikes. So having said that, we've kept it really short for today. And having said that, thank you again for attending today's session. Excuse the weak connection, but I think we'll work on it on the next meeting. So enjoy the rest of your trading day. Are there any other questions before we break? There's usually a lag between when I see the charts and when someone types and when I see the charts. So I'll leave just a few seconds. Are there any other questions based on what you're looking at today? Okay, so from today's code, from which time frame do you start your top-down analysis? Order block, mark them from which time frame? Kindly show the practical. Kindly show practically while explaining it. Piecemeal. Okay, so let me find a trade we took yesterday as an explanation. Yesterday we were looking at GBP CHF, Swiss franc. Where is it? Where is it? Where is it? Where is it? I think I've already changed it. You can use this GBP CHF. Okay. So first off, we will start our analysis. I usually start my analysis from the daily just to get a feel of where the major trends are. So in this case, or what's the bigger picture, not necessarily the trend, but the bigger picture. So I'll just mark all the key levels, especially on the H4 on the daily, but I'll usually be inclined to the H4. And then once you're going to the hourly, you have a very good idea of what is happening. Now, for the order blocks and the supply and demand zones, you usually just it's not an exact science. If you see order blocks on 4 hour, then that's where we'll be marking them. If you see an order block on the H1, but that's the lowest I can go. I can't go below H1. So yesterday we had this trade, and we'll explain the fundamental reasons why. So we had just a minute. Trying to locate. Okay. Use the other block. No, I think it's this one. Just a minute. Okay. I'm trying to retrace yesterday's trade. Bit confusing. I think it's this one. Yeah, it's this one. So we had sort of an order block. Was it this one? GBP CHF. Okay, so yesterday we had this was a trade we are looking at. I'm trying to recall which order block we used. I'm guessing it's the very top one. Just a minute. No, it's this entire block over here. Like that. So you can start marking your order blocks from the 4 hour like that. So it was a very small order block, but I think we refined it on the 1 hour. Yeah, so we refined it like this on the 1 hour. So I think this was the section here. A small move, then yeah. So we had this push downwards, and then we had two order blocks. There was that one, and there was this one here that we're looking at. So once you've marked them like that, you go to now the lower time frames where you can start. You see, it's very chaotic when it goes to the lower time frame. But once you get to the lower time frame, you sort of have should be this one over here. Okay. Yeah, like that. So that was the zone we were looking at. We had equal highs here. I'm trying to remember this setup clearly. Here. Just a minute. It wasn't actually an equal high because it was more of that, but I'm going to mark this like this over here. So it was a fairly straightforward trade. There was an imbalance here that the market had made in the morning, and then we had this push upwards, and my anticipation was we start selling off from this region. However, we went back into the bigger order block, which was in the 4-hour time frame over here, and then from here we just took the trade. Now the reason was more fundamental than technical. So let me see. I'm trying to, I think we can have a different session for this, because now I have to go back, because the number of charts we look at are quite a lot. Yeah, so this was it. At 3, we had our MPC meeting minutes. So usually mix fundamentals and technical so that we have a clearer understanding of what is happening. So we had this meeting minutes over here, which came in at 3, but we were still expecting that the Swiss franc was also going to be strong. So that was sort of how we are looking at the analysis, considering most of the meetings we've been seeing from from central banks is every time we had the meeting and then afterwards the currency tended to weaken a bit. So this has been a trend from last week with not Australian, but Bank of Canada and the ECB last week. So having said that, and even the BOJ this week, so approaching every meeting, most of the central banks are seeing that after the meeting takes place, the currency weakens, despite the fact that they're saying they're going to hold. So that was the play that we were waiting for yesterday with regards to GBP CHF. Now, I wouldn't use technicals if I'm not sure of the fundamentals, and that's why we decided to take and that's why we decided to do analysis on both. However, I was more inclined to the fundamental aspect, which was I'm already expecting some weakness in the currency. So we didn't take GBP USD. Rather, we took GBP CHF. Why? Because dollar was already weakening, and I wouldn't want to have two weak currencies. Oh, sorry, yeah, two weak currencies. So in that case, we expected again CHF over here. We had news on Swiss franc earlier in the week. Where is it? BOJ. We had inflation news on Swiss franc. I'm trying to locate it. I can't really find it. Okay, I think, oh, where is it? Yeah, so, anyway, I think we'll have a more comprehensive session on that, on how we take trades on the evening videos. Because for now, I have to go back and start looking at the trades I took and then the reasons that we gave for those trades. But generally speaking, once you have an established fundamental thesis for the currencies, obviously you have to, I don't trade like a specific currency like GBP, USD, and that's it. We usually look for a good currency that's bound to be strong and then pair it with a weak currency. And in that case, yesterday, the meetings were quite hawkish, and that made the pound slightly strong for the day, even though it's been weakening afterwards. And we had to pair it with something that we thought was going to weaken. And that's why we came with that trade. So we had this trade over here, because I remember I did a pending order on this. I'm trying to find the technical reasons because the guy doing the technicals is different. And I do the fundamentals. But having said that, this was a trade we took based off of this. So we thought guys will start selling. So let me just go to the 15 minutes. So we all know our supply and demand basics. That is, if there's an imbalance here and the market goes back to that zone to start selling again. But we thought because the news is still, so yeah, this is GBP CHF. So there was an imbalance here. The market started coming back up. And obviously, guys started selling from here. But we waited until the stops were taken out. And that's when we had the chance to enter and sell it back lower. So that was the trade. It's never the same. No two trades are going to be the same, obviously. It's just up to you to know when you're seeing something that doesn't look okay, is that a trade opportunity that is presenting itself? So yes, you have the standard rules, but you also have to have an eye on when something is happening and you can't really explain it normally. So in that case, we knew, obviously, we're not going to see further strength going higher. And that's why we had the pound weakening after the meeting. So I know it's a very long explanation, but I think we can cover it properly in the evening videos on Monday and Wednesday in terms of strategy. For that also, we have a strategy series on FX Pesa, the YouTube channel. So if you go to the strategy playlist, you will see this specific strategy, supply demand, then we have market structure. So if you combine those two, you have a very clear understanding of how we take the trades here. I hope Jace could have answered the question. I think I wasn't really prepared for explaining the entire strategy right now. Explain NFP. The XY analysis shows it's gonna weaken on my side. Yeah, so that's what we've been talking about. We expect, before I explain NFP, we expect the dollar to be weakening. Why? Because if you look at this, first off, we started with the currency meter. If you look at it, you can see that dollar generally is showing some signs of weakness. And after yesterday's meeting, the market is starting to price some sort of weakness based on an early rate ease. And that's why we're saying today we'll be looking at AUD USD because we assume or we're anticipating a weaker dollar and a stronger Australian dollar. So if you pair those two, we might have a good opportunity there. Okay. I doubt very much there is the S&P 500. I doubt very much there is the S&P 500. Okay, I'm not really understanding, but so at FX Pesa, the S&P 500 is called US 500 rolling contract, and then UT 100 is the Nasdaq, and then Dow Jones is the US 30 index. So you'll have different tickers, but it's the same thing. Okay, so I'll just leave it here. What of today's strategy and the news? Again, so some of these things we've already talked about in detail, so you can just scroll backwards and see what we've already discussed, because we've already discussed what to expect with regards with a non-farm and how to interpret non-farm. So that's one thing you need to look at. Now, explaining non-farm, I think we have a video on this. These sessions are only meant for us to see what to anticipate for the day. So again, non-farm is simply employment figures. Non-farm is simply employment figures excluding the farming industry. So it gives us a good approximation of how the economy is doing in terms of creating employment. And this is one of the central bank's mandate. So it's usually employment and inflation. So if employment is doing okay, it gives room for the Fed to raise interest rates. And interest rates usually make the currency strong. So that's why this is a very important number. But I'm sure we have videos on this explaining in depth in the other sessions. So if you just go to the FX Pesa YouTube channel, you'll always just see it over there. Any other question? So I believe we know today's play. I'm getting back the camera on because the network was very weak. But I believe we know today's play. Personally, I'll be looking at AUD USD. Given the reasons, next week we expect RBA meeting for them to hike rates. So expectation is if we have a strong Australian dollar, and if you expect the US dollar to continue being weak, then that's a good combination to look for on AUD USD. So this is one currency that we'll be looking for. The other thing we said is last week, or the better part of this week, we've seen a lot of positive and negative news, and the positive news hasn't really pushed the market. So the market is really anticipating that Fed ease talk, and that's why negative news is having a bigger impact on the market than positive news. And that's why ISM pushed the market, made the dollar weaker than JOLTS, which was positive, making the dollar strong. Okay. So having said that, thank you for attending today's session. It was supposed to be a short session, but oh well. Thank you for attending. See you in the next session. We will have a recap on what has transpired this week. So next week, again, Tuesday, very important, especially if you are trying to look for those swing positions on Australian dollar. That's one that you really need to look at.